Well, that's it for global commodities market and all of it. But Nigeria has reaffirmed its commitment to Africa's economic development with a fresh $500 million contribution to Nigerian Trust Fund. Minister of Finance and Coordinating Minister of the Economy, Mr. Wale Edu, has made this announcement at the official signing of the agreement at the African Development Bank Annual Meetings 2025 in Abidjan. Now, Mr. Edu said the gesture is a strong signal of Nigeria's leadership in supporting low African income countries and also used to pay tribute to the outgoing president of the AFDB, that's Dr. Akinwumi Adesina, whom he commended for steering the bank to high heights over the past decade. On the renewed commitment to the trust fund, the minister disclosed that Nigeria will inject $500 million into the NHF system. He said over time that the country had extended the fund's tenure to 2024. According to the renewed commitment, it aligns with Nigeria's development priorities, which includes poverty reduction and economic modernization and industrialization. All right, moving on. Meanwhile, the Naira appreciated by 4.59 kobo against the US dollar, closing at more than 1,500 Naira, the official exchange rate. Now, data from the Central Bank of Nigeria's website shows that the Naira recorded a 0.28% gain, indicating a slight, consistent upward trend on Wednesday. Now, the Naira had exchanged at 1,590 Naira 74 kobo. To the dollar, continuing its modest recovery from earlier volatility in the currency market. Earlier in the week, the Naira traded at 1,583 Naira 73 kobo on Tuesday, and on Monday, 1,579.40 kobo, reflecting improved demand and foreign currency inflows. Financial analysts attribute the currency's recent gains to policy consistency and improved liquidity in the foreign exchange market. There has been notable increase in foreign exchange supply, believed to be driven by growing investors' confidence and reforms introduced by the current administration. Well, let's get to our first conversation now. In President Bola Tinubu's nationwide address commemorating 2 years since assuming office, the president outlined the strides made under his renewed hope agenda to build a sustainable and prosperous Nigeria. President Tinubu emphasized that his administration reforms aims to reduce the cost of living, promote economic justice, and create a business-friendly business climate that attracts investment. He commended Nigerians for their perseverance during the difficult times and credited their support for enabling his government to confront inherited challenges decisively. President Tinubu recalled the immediate measures taken to eliminate fuel subsidies and reform foreign exchange policies, describing these as critical to averting fiscal disaster. Well, let me get to my first conversation this afternoon. I have with me, joining me via Zoom to start this afternoon, the founder, chief consultant, B. Adedipe and Associates Limited, Dr. Biodun Adedipe. Dr. Adedipe, it's good to have you join the show.
Thank you so very much, Tolu. A very good afternoon to you, and happy to be with you this afternoon.
All right there. Thank you so much, Doc. I think we should start with an overview of these policies, these bold policies of government that we've seen in very recent times. A lot of reactions, mixed reactions, have trailed this development. How does it come to you and your own understanding?
Okay, thank you so very much. I will start with this, and that's the fact that if we look at where the Nigerian economy is today and where it was 2 years ago, May 2023, today is in a better place. And I put that in context and that is a framework that my firm developed in 2020 as a recommended response to the COVID-19 pandemic at the time, both to corporate entities and even governments around the world. And what we brought forward is that when you are in a crisis, there are 3 stages to getting back online. The first stage is to survive. That means survival is the first stage. So what are the things you must do in order to survive? Now, having survived, the next thing now is to stabilize. So when you now achieve stability, the third phase now is to restart growth. That's the way we laid it out. And it worked beautifully well for many entities and even some, government agencies around the world that we put the framework to as a guide. Now, if you look at that, where we were 2 years ago was a major threat to Nigeria's survival, whether you want to look at output and prices, or you want to look at financial statistics, public finance, even governance, and of course, any aspect of our nationhood you wanted to look at. So today, for me, we have survived the threats that we faced 2 years ago. Where we are now is that we have achieved some measure of stability. So we can now restart growth at a faster pace than we had achieved in the last 10 years. Yes, last 10 years, no doubt, the economy was growing. But we also know 2 things about the growth. Number 1, it was not fast enough. And then number 2, it was not inclusive. That means creating sufficient jobs. So where we are today, I would say, is we have survived the threats we faced 2 years ago. We have achieved some measure of stability. So now we have every opportunity to begin to put speed to our growth.
A good start, Dr. Adedipe, I would say, to this conversation. But you know that the man on the street would come up and argue with you that what I would buy for 1,000 naira in 2023, maybe at this moment, 5,000 naira might not even be able to buy you the same thing. So the argument in some quarters, because I started this conversation yesterday, it's been like a series of conversation, and the argument has been like the palliatives or follow-ups that was to come immediately after those reforms were undertaken didn't come at the right time. Some also argued that there was a bit of no coordination among some of those that instituted some of these reforms. I'd like you to react to that.
Thank you so very much. Now, it's so easy to pick on things as they are today, what we call the spot situation. But I always like to situate conversations like this in context and looking at trends over time.
Okay.
Now, and I will use 2 examples to illustrate. Now, in a conversation around this sort of issue, sometime last week, I brought to the attention of the audience an experience I had in UK way back in 1984 December. I was then a visiting doctoral student to one of the top universities in the UK. And I bought a particular brand of shirt, then Van Heusen shirt, for £14. Now, a shirt of the same quality in the same UK today is going for about 39 pounds, 40 pounds thereabout. That's even if you buy multiples. One normally goes for 65 pounds. Okay? So now tell me, between 1984 and now, shouldn't the price of that brand of shirt have remained the same? Certainly it wouldn't be over time. The second example was a conversation I had with my driver. I asked him, we went out early this week, and I said, come. I call him Dick. I said, Dick, come. What was the price of a bag of cement when you built your house in Ikorodu? He said, well, it was about 2,000 naira. And I told him that, okay, when I also had my own first house, that is where we live currently, my family, and that was way back in 1990 that I paid for it. 92, we got a letter of allocation from government, it's a government estate, and then 94, we moved in. Now, when we were to take over and now renovate it a little to make it fully habitable, a bag of cement then was, in fact, I think less than 100 naira at the time. And that was some 31 years ago. But today, a bag of cement is much higher. So I told him that, in fact, for any economist that is a professional, you will remind yourself that the second key element when we talk about the objectives of macroeconomic management is moderate rate of inflation. All right? But things can happen also that make inflation rate not to be moderate. And that's what we are discussing today. So no doubt, things have become more expensive. But if I were to advise an individual like myself, a household, I would say when things happen this way, it is a time for you to again look at your priorities and reorder them. That's on the one side. The government also, yes, those policies were announced, inevitable, because we are like at a precipice at the time. If we didn't go that route, the economy would have collapsed. That's the reality. So now, if you is in distress, almost getting into an accident, and you are saying that they should have brought something that would be an immediate palliative to those who became victims of that accident. Now, if an accident happens, the first thing is to save life. When you talk about palliative that will come after, they don't happen at the same time because nobody ever prepares for an accident enough. You don't prepare enough. So my perspective is different. The point is that, yes, those palliatives, quote and unquote, didn't come at the time the pronouncements were made. But did they come at all? Yes, they came. And so where we are today is not exactly where we were a year ago. A bag of rice a year ago was over 100,000 naira. A bag of rice today is between 60 and 65,000 naira, depending on the brand. So for me, as we speak today, palliatives coming later or immediately is a non-issue. The point is it has come, and where we are today is better than what the policy, when it was announced, triggered. So that's my response to that. It's the reality of life. And maybe I should mention this also. Government doesn't sell rice. Government doesn't sell beans. Government doesn't sell gari or yam. It is we people that sell these things. So if, for example, as you said earlier in your opening remarks, the naira has stabilized, how come that most prices of imported items or items with import content still remain where they were before naira stabilized? Why is it that our traders are still pricing, their commodities for sale, as if the condition that led to increase in price were still there? That's the question we should be asking ourselves. But it's so convenient to point at the government, whereas it's a textbook thing that I always tell people. Anytime an economy goes into recession, it's a function of despondency by citizens who stop spending and companies who stop investing. So which is why textbook recommendation is always that government should step in and start spending so that can incentivize companies to start investing and individuals to start spending. So that's the way it works. It's all about expectations and how we respond to those expectations.
Let's take a step further and look at the speech of Mr. President yesterday. He talked about debt to GDP ratio around 53%. He also said debt service to revenue has dropped from nearly 100% in 2022 to about 40% by 2024. IMF loans were also paid, talking about the loans during the COVID-19 saga and all of that, and external reserves has increased by about 500%. How does that come to you? From about 4%, $4 billion, I beg your pardon, to over 23 billion. I think that's net reserves has actually increased. How will you react to all of these figures? They look pretty good.
Right. Yeah. For me, these figures look pretty good. And those were the things behind my remark earlier, that we have achieved stability. Prices are no longer as volatile as they used to be. Stock market on the one hand, even commodities market, except for the shock that the US government tariffs are causing all over the world, which means they are not peculiar to us. Except for what that is triggering, there has been a measure of stability in Nigeria and what I will call a recovery of investor confidence. Because investors, of course, in two planks, foreign investors and domestic investors. And that is what we see happening in a number of things the government is putting out. Look at what happened this week with the Sukuk bond issued, oversubscribed by almost 400, 500%. And that's quite significant. That's a measure of investor confidence. That look, we are sure if we put money in this and the purpose is being raised for, makes a lot of sense to investors. And of course, we can see there is not possible to allocate to everybody that requested to invest in that instrument. All of those are things we look at and say, yes, no doubt, the macroeconomy has stabilized. So what now remains is to deepen the reforms further so that, as I said earlier, the man on the street can feel it. That's my interpretation of it.
Before I let you go, almost finally, there's never enough time to talk to you, Dr. Idikpe, you know that on television, but interesting conversation. Let's look at the reforms in the oil and gas industry. I also like to get your views around that space. I agree that there's been some changes, you know, the executive orders and all of that, even following the implementation of the PIA, investments kind of improved in that space, also trying to revamp the NNPCL in its totality. What are your thoughts also around that space?
I think we've also gone in the right direction. And a number of pointers. I think Mr. President also mentioned one of them in his speech. And that is, if you look at the rig count, which in fact is a forward, or let me call it a lead indicator of what is happening in the O&G sector, oil and gas sector. Yeah. Okay. When we look at rig count for Nigeria, it has also increased significantly. That's a pointer to investment in production, equipment, and infrastructure. Yes. That's on the one side. When you look at output also, it has improved from where it was in 2023 to where we are today, even though it is less than the budget assumption, yeah, but it's still a better place than where we were, all right? Equally, when you look at investment, that's an interesting thing there. You find that every time a major international oil company, an OIC, wants to divest, there's always either another IOC buying it out or a local oil and gas entity that is buying that up. So those are some of the things that also indicate that clearly investor interest in oil and gas in Nigeria has actually picked up in response to those executive orders. With a new NNPC, that's the way I would brand the new management board. And of course, made up of mostly professionals in that space with track records. We expect, therefore, that will not only boost confidence, but bring an improvement generally in the performance of our oil and gas sector. Maybe I should also mention the switch from being a net importer of refined oil products, now getting to a point where we produce enough domestically to take care of our market and also exporting those white products. That's a very huge change, which of course we know a major policy shift that this government did is also a factor in that. That is crude for naira, which is a major we've been canvassing for years. And I'm very happy, especially as an advocate, that this government did that.
So finally, as we wrap up this segment, let's give an outlook in the medium, short to the medium and to the long term, considering where we are, what we faced, and staying firm with this policy implementations.
I see a Nigerian economy that certainly will grow faster, not only than the achievement of 3.4% last year, but ahead of what both IMF and the World Bank projected for this year. Because as I said earlier on, all the necessary work required in terms of fundamental reforms have been done. Yes, a lot more still remains to be done. But if you look also at inauguration of a credit guarantee company, which is very, very vital. Now, in the microfinance space, we call it credit life. That means you insure the life of a borrower in the event that the loan goes into default. But now it is institutionalized at the national level. And for me, that also is a big game changer in the credit market in Nigeria. And remember, and we said this way back in 2007, when we were working on the financial sector strategy for year 2020, that the critical thing for growth of any economy, you can fact check this, is the credit market. So we said the way to go is to democratize credit, make it available, accessible, and affordable. So what was just inaugurated by Mr. President for me is a big credit infrastructure requirement within that credit market that can also accentuate the rate of growth of this economy. So I expect an economy that will grow stronger at maybe 4.2, 4.3% this year, and then grow even faster in 2026. And of course, in the medium term, looking at the next 3 years, 5 years, I see an economy, yes, we may not hit 1 trillion, except maybe when we rebase, and now also bring in this fast growth rate on top of that. But primarily, I see an economy that will create more opportunities for the citizens and those who have faith in the system. The only advice I can give is that, like I said to South Africa in 2007, when they challenged me on Vision 2020, I will repeat the same here today. And that's the fact that this economy will continue to grow. It will continue to have opportunities. Those who will benefit from it are those who position today for what may likely happen in another 5, 10, 15, 20 years. And that's the way I would like to end it. It's a fantastic economy that we are making the right course now. And if this course continue, I will deepen it further. It can only be better for every one of us.
I think I like that. That note we're wrapping it up on. We need to better position ourselves to take advantage of the positives of our economy. Dr. Biodun Adedipe, founder, chief consultant, B. Adedipe and Associates Limited. Thank you very much, as always, making sense of this analysis this afternoon. Do have a great weekend.
Thank you so very much. And you too.
All right, there. Well, we just